onward for project one. I believe that we've gone all the way through discussing the cash flow, and at this point then we move to really the final document in our project one, which is the projected balance sheet. Now a little bit of housekeeping. I haven't set, and I apologize for that, I have not set, and nor have I told you folks any deadlines for some of these steps that we're taking on project one, and I apologize because I like to get those coming in on a regular basis so that I can look at them, give you feedback so that we can get them corrected, because I understand that each document is somewhat dependent on what's come before it, and so if we're not fixing things as we go along, it can create a bit of a issue at the end. And so I'm going to change that. I'll probably send that out in my email and suggest that we set some deadlines, and you know, set opening day balance sheet and startup will be sent immediately. You guys should be done with those anyhow, right? So I'll set that deadline really soon. Income statement and cash flow maybe a few days hence, and then ultimately this pro forma balance sheet maybe a week or two down the line to give you guys a chance to get things done and work back and forth with me. So because I don't see folks have been putting anything into those drop boxes, but again, that's my fault for not addressing the fact that there should be some dates on those. So we'll go to work on that. If you have some problems with the dates and whatnot, you know, let me know, and we'll try to get some of those things figured out. But at this point in time, I hope you've been working along on this project. You should have been, because I have been addressing it, and then you should be able to submit these things in a fairly timely manner, I would say. So anyhow, project one, the last one, is our pro forma balance sheet. I'm going to try to bring up, I think I've done some of the project stuff to date, and so I want to take a look at that. Let me just get to my spring here of 2015 folder. I think I have one. That's right, I've been doing a mowing business. Yay, I've been just a heck of a business to have when we just got 4 inches of snow. But in any event, I guess I can do my planning for the summer. Okay, it's getting there. By the way, the projected balance sheet that I have on D2L, I may try to switch that out too. I've got another one, and I'll show you, that has instructions on it. You know, that I kind of designed or put some instructions in that were kind of line by line, where a person could kind of follow that. Got a few arrows and whatnot, and that might give you some other ideas as you're filling in some of these things, and so I might end up doing that. Okay, let's go back. So I had done my cash flow, right? Hopefully I kind of got that finished. Okay, in any event, it should be finished enough. I didn't do my loan principal, and I didn't do a few other things. I do have my interest in here, but it's wrong because I didn't finish my interest correctly. Okay, but I've got it the same as on the income statement, and so I'll probably be okay. Okay, so I'm going to take my balance sheet, my projected balance sheet, and the first thing, as always, what I want to do is move that or copy that to my mowing, move it to the end, click OK, and then it becomes a part of my overall project, right? So the historical column, okay, the historical column should be exactly like my opening day balance sheet. Okay, and for now at least I'm going to just move this over. Sometimes I find that easier if I'm going to be toggling back and forth. Oops, I wanted to move it one more. If I'm going to be toggling back and forth between these two balance sheets, then I'm just going to stick them right beside each other, right? Okay, so here we go. Cash in bank is equal to my cash in bank from my opening day balance sheet. Enter. Okay, on the historical, my prepaid expenses are equal to those from the opening day balance sheet, which is my $600, right? My machinery and equipment's equal to my $4,500 is equal to. Okay, so get all that done, right? What else did I have here? Okay, and if they don't exactly match up in terms of names and whatnot, you can change those over here, right? Put it in the right if you think it's a fixed asset or another asset or whatever. You know, that's fine. You can figure out where it fits, and those are small things. If I'm going to have a disagreement with you on those are pretty tiny. I might just ask you to move it or something, but a lot of it shouldn't affect then whether or not we ultimately balance, right? Okay, my bank loan I'm going to put in here is equal to my bank loan payable there. Okay, and then I've got a, what the heck did I do there? Oops, I clicked on something incorrectly, so I'm going to put that back in there. I'm sorry. My bank loan payable is equal to that one. I need to get this in, otherwise I won't be able to do the projected, and so I'm kind of painstakingly taking you guys through that, and I'm sorry, but my current portion of long-term debt, I can also take that from my opening day balance sheet, or I could go ahead and get that from my loan amortization. So my owner's equity then is equal to what I have here. Oops, I gotta hit the correct button, and that becomes my invested capital. Okay, so we got a little bit of different terminology here, and so my owner's equity becomes my invested capital. Okay, and that's going to stay the same, so you know. Okay, and then I've got retained earnings, and less owner's withdrawal. Those things didn't happen here, okay, and so I don't need to worry about those, but they're gonna occur here after 1 year. Okay, the other problem that I have, and shame on me for doing this, but all these black boxes then are not showing their numbers, their totals. Okay, and so I should change those to a different color background, and I'll either change the background here or I'll change the text. Let's go ahead and change the background, and we'll just change it to plain, and there we go. Okay, so now I've got that historical done, which should be just like my opening day balance sheet. Now I start here, and I've got some stuff here. It says this comes from the bottom right hand, so my cash at the end of year 1. So if I've been through a year, well, cash, it seems to me like that's going to come from my cash flow. So I'm going to put this as equal to my cash flow, and that should come right from here, this bottom right hand corner basically. Okay, hopefully I've done things correctly here. My prepaid expenses should be 0 if I wrote it off on the income statement. So it kind of depends on what my prepaid expense was here. You know, if that $600 is something that I had that I wrote off over here, and I don't see it, okay, so I forget what my $600 of prepaid expense was. It might have been a deposit or something, right? I'm going to go up and take a look. Okay, it was prepaid insurance, so I should have written that off on my income statement. Where is that? Ooh, and I didn't. Okay, and so I'm going to do that. I'm going to do a prepaid, or I could just put insurance actually on here. Okay, and I had $600, so that's going to be $50 a month. And I can take that across there, and so that'll be $600. There we go. Okay, now I put that on the income statement. Does it go on my cash flow? And the answer to that is no, and the reason is because I actually showed that I paid that here in my startup as a prepaid expense. Okay, and then on my income statement I'm using that up during the course of the year. If I were to cancel that insurance, I'd get a refund. They would prorate that. They'd give me a refund for the rest of the year. Okay, and so we do have some expenses sometimes that are like that, and so that's one of the few, but I put that on there. So now on my balance sheet, then on my projected balance sheet, my $600, it says should be 0 if I wrote it off on my income statement. So I have written that off on my income statement, so this is going to be 0, so I can just leave that blank. Okay, my equipment and machinery says should not change unless you purchased capital equipment during the year. So quite simply, I didn't. Okay, so that just stays the same at the $4,500. And then my less accumulated depreciation on all fixed assets should equal the 12-month total from my income statement. Now it does say, make sure, the little red pop-up thing says, make sure to enter this as a negative number because our depreciation needs to be entered as such. I'm going to come here to my income statement. My depreciation was $7,500 a month, or $900 for the year. So I've entered that as a negative. Boom. What that's telling me, and we'd like to do this on balance sheets because it tells me what I paid for that equipment originally. And that tells me how much is depreciated through the year or years as we go on. And then it tells me what it's worth today, basically, at least from an accounting standpoint. Okay. Other assets, I've got this $100, and I forget what that was, so I need to go and take a look. Okay, might be on my opening day balance sheet. $100 was my sign. Okay, and what did I do with my sign? Did I depreciate my sign? I did not. Okay, and so my sign's still there. Did I write that off on my income statement? Hell, I don't think that I did. Okay, and I probably should have. I actually probably should have depreciated that, but I've got it on my startup. Okay, I've got it on my cash flow, which should be in here as a part of my advertising, right? Isn't that a part of my advertising, that $350? Yeah, the signage, printing, advertising, so it's part of that $350, and I carried that over onto my balance sheet here. Okay, so now that's another one that I think I'm just going to write it off because I should have, I think, on my income statement. So I'm going to put that $100. I won't write it off over time. Okay, but I had it, I paid for it. It's going to show up on my expenses. Okay, therefore at this point then it's going to be equal to 0. Okay, the sign is gone, and so this is going to be equal to 0 now. Okay, I know that's sometimes kind of confusing how we take a look at items that you know we've paid for, and the important thing is, and the thing that I'm trying to get across to you, is that if it's on your opening day balance sheet, okay, then it either needs to be written off on the income statement or it continues to be on here, right? You know, just like our machinery and equipment, it's on our opening day balance sheet. Okay, have I written it off? Well, actually, I've written off $900. Okay, so it continues on here, and I show the $900. This prepaid expense, my insurance, I wrote it off on the income statement. Okay, my sign, could I have carried it over here? Yeah, but at some point in time, I actually need to write that off because its value, it depreciates pretty quickly, pretty rapidly. So I should write it off. So I did right there in the the income statement. And it should be okay. So current portion of long-term debt. Well, if this was the principal portion from the first 12 months of payments, what should this be? Months 13 through 24 from the loan amortization, right? So I can hit my sum, and I can go find my loan amortization, which is right there. And I got to find payment number 13, which is here, and I'm just looking for the principal portion. And I come down, and again, that little box shows up that counts it for me, so I go down to 12, hit enter. It plugs it in. It should be bigger than this, right? As I pay my loan down, my principal portion gets a little bit bigger, my interest portion gets a little bit smaller. So it is bigger, okay? Now this, and I've got some nice little arrows that show me the column E here should equal total long-term debt from column C. So it's just going to equal to this. I even got the same colored little cells on it, so there we go. Okay, so my total debt's been reduced nicely. Okay, my invested capital stays the same forever unless there's a capital injection. We take care of withdrawals down here with owner's withdrawal and whatnot, but if we had to, and sometimes that happens, you'd have to inject some new capital. For our first year, we're not going to project that we have to inject any new capital, so we'll just say it stays the same, right? Okay. Now my retained earnings at the beginning of the period were zero, right? I didn't have any retained earnings basically at the start of the year. Okay, but do I have retained earnings from the current year? Sure. And where does that come from? It comes from my 12-month income statement. It's basically my net income that I've projected for the year. And so I gotta go hit my equal sign and go to my income statement. Click on that and click OK. There we go. Now, I would also have less owner's withdrawal if I chose to take out any money from my deal, and I'm not sure if I did. Oh, I do have owner's withdrawal of $2,400, and so that shows up here on my cash flow. Okay, so I need to show that here on my projected balance sheet. So equals but that's less owner's withdrawal, and so I actually need to enter that in as a negative. So I'm going to come up here and change that to a negative sign and hit enter so that it's negative. Okay, there we go. Now I'm off a little bit, okay, and you guys might be too when you get to this point. And so we got to figure out where I'm off, and I hadn't finished my cash flow or my income statement, so I may have some issues there that I need to take a look at. I'm going to do that quick, and then I'll get back and show you what I found out instead of taking your time while I'm doing my sleuthing. Okay, I figured out what I had done. Not actually wrong, but what I hadn't completed. Kind of like I said, I hadn't finished some of these. So when I looked at mine, and you know, you guys, if you're off, you know, do a little sleuthing and see if you can figure it out. But my total assets and my total liabilities were off $800 even. That was kind of, I think it was 800 even, but it seemed like an awful even amount. Sometimes I think, geez, I ought to be able to find that. Look at my income statement and my cash flow and find exactly that $800, and that's probably it. Well, it turns out mine was maybe just a bit more complicated than that. When I looked at my cash flow and my income statement, they were pretty much the same, but the one thing that I hadn't done on my cash flow was completed my principal payments. Okay, I had just 3 of them in here. I didn't have the other 9 months, and I've left 1 month off just to show you, what I had to do. And so that made sense to me that might have been my problem. And the reason for that, right, we're showing our principal here, and so we also have to show it on our cash flow that it's actually decreasing our cash up here. Otherwise it's going to make our statement come off or be off. And so for my last one then, when I came to the cash flow, came along here, and so my 12th payment, that should be the 12th principal payment. Remember, I had my interest up here, so I just hit my equal sign, and I come to my loan amortization. I come down to my 12th payment. Yeah, this is kind of a painstaking process that you have to do each of these one at a time, but you get it done, you're done. Okay, now I've entered that in there. It's changed my my cash, okay, which will change obviously because I've linked everything properly. It changes it up here, right? And now I come down here, I got total assets of 6603, and I have total liabilities and equity of 6603. So I've balanced. Technically I'm done. Don't force it to balance. I've seen students do that in the past where they'll just plug a number in someplace because it makes it balance and they think they're all done. Generally I catch that. Okay, and so I'd like to think that I've always caught that, but maybe somebody's slipped one over on me, I don't know. But usually I catch that, so let it balance, and then we have to figure out how to make it balance or how to get it to balance by doing it properly, right? And that's kind of why I'm here, and we might go back and forth, and I might make you look for a few things and do a little this and that, but we always get it to balance if you work with me. Okay, I haven't failed in that yet. If you work with me, we'll get it to balance. Okay, so get them submitted, and we'll get a look at them. Again, submit them in kind of order now if you can. If you got the whole workbook together, that's fine. You can put it in the startup and opening day balance sheet, and likewise the income statements. So I expect that your full workbook's together. I'll probably just review the things that are required for that particular Dropbox. So again, I'm going to set it up so that I'll send it out in the email so that we get your opening day balance or your startup and opening day balance sheet here due in the next day or two, so you guys can get those in the Dropbox so I can start looking at them. Probably end of the week or first of next week, maybe Sunday, we'll have your income statement, cash flow due, and then maybe end of next week we'll take a look at having your final project, your projected balance sheet done. So that's it for the day. Signing off. Thanks, and we'll talk to you next week.